You have to stop using candlestick charts right now because there is a new type of chart out there that is 10 times better. The reason it's so much better is because it actually displays the depth of market, the level 2 data, right on the chart. And that means you can visualize the support and the resistance that's created by these big buy and sell orders. So imagine this. You're watching the price selling off quickly and you're trying to figure out where to buy the dip for a bounce back up, but you don't want to get in too early. Then all of a sudden you see the big buy order appear right on your chart. And now you know this is going to be support because that buy order is so large. You now have the confidence to get in right there. Or imagine this. You're watching a breakout pattern forming and you're thinking about taking a position for a squeeze through the high of day, when suddenly there's a big block of a seller right there on the offer. You know that they're going to create resistance and they're going to prevent the breakout from working. It's going to be a false breakout, but you avoid the loss. These charts will make you a more accurate trader. They are so good, it's like combining quantum mechanics and general relativity into one universal, unified theory. Okay, that's what people have been telling me for the last 18 months, and I have been skeptical. I've been like, guys, there is no way there's a new type of chart that's going to replace candlestick charts. Come on. I've been using candlestick charts like this for my entire career, and traders have been using these charts for generations. Candlestick charts are the universal language of the financial markets. But you know what? I finally broke down. I say, you know what? I'll give it a try. I'll give it a try. I'll see how it works. And I've actually been pleasantly surprised and impressed by these new charts. I didn't expect it. But you know what? These do something a little different from some of the other charts that have come and gone over the years. Some of the other platforms that have been a fad that people get really into and then it just kind of fades away. Because these charts are actually using the level 2 market data, and that's valid. I use level 2 in my own trading big time. So let's go ahead and dive right in. Full disclosure, there is no affiliate relationship that I have with this platform. This is called Bookmap. If you want to use it after you watch this episode, by all means. If you don't want to use it, don't use it. Am I going to keep using it in my own trading? That is still to be determined, but I think you'll have a better guess by the end of this episode. So what Bookmap does is it actually takes all of the orders that have gone through and it takes the orders that were placed on the level 2 and it displays them visually on the chart. What I like about this is that a traditional candlestick chart is just showing us the historical price action. It doesn't show us what the spreads looked like, and it doesn't show us what the level 2 looked like as the price was moving up or moving down. But Bookmap does exactly that. This is actually showing us what the level 2 looked like. Now, at first, this is probably hard for you to visualize, and it was for me too. In fact, I laughed a little bit. I was like, guys, this is absurd. Please. This is not a real chart. This is not a real thing. But I will stand corrected here. So let's go ahead and jump into this slide deck, and I'm going to break down for you how this actually works, how to use Bookmap. I think the first thing I need to do is help you get oriented with what we're looking at. So there are 4 things I want you to understand. Number 1, Bookmap displays level 2 orders, depth of market orders, visually on the chart. They also display where large limit orders were placed and were canceled. This is very helpful because you can see where big orders were placed on the chart, but then were pulled off. It also displays where large buy and sell orders were actually executed. So it shows you big block order prints. It also displays, and can display if you choose, a point of control line, which is a sort of taking a concept from volume profile. In fact, what Bookmap says they do is they sort of take concepts from a number of different popular types of charts or indicators, including volume profile, footprint charts, and just their standard depth of market. It takes some of the best of each of these things and combines them into this one unified platform. So if we start just with one component of this platform and we'll sort of walk through each one, we're going to start with the historical prints. So the historical prints are in bubbles. So each of these bubbles that you see, these are actual orders that went through. The bigger the bubble, the bigger the share size of the order. Now, this is relative, which is the first thing that I don't like, because if you have a stock that has very light volume, this might only be like a 3,000 share order, which honestly is not significant at all. But if you have higher volume, this could be a 300,000 share order. So the bubble size is not standard across every different chart you're looking at. It's relative to what's big for this specific stock. So that's something to be aware of. The green bubbles going up, naturally prices going higher. Red bubbles are some sell orders. Green bubbles, again, are buy orders. Now, whether a bubble is green or red brings up the topic of how exactly do you figure out if it's a buy order or a sell order? Because whenever you have someone who's buying, well, obviously someone sold them shares. And whenever you sell, someone is a buyer. So it's based on which trader has initiated the transaction. And this is a phrase that is used in market data and in the way fees are charged on trading, but it's about who is taking liquidity and who is adding liquidity. So I'll pull up my whiteboard here. The way this works is when we're looking at the level 2 here, we've got the level 2 and we've got the bid and we've got the ask, the offer. So if you have, let's say 405 by 415, if I want to buy this right now, I could place an order to buy at 405 and I could get in line behind this person who was there first, or I could place an order, let's say at 406. I'm going to bump the other guy down. He's going to still be at 405 and I'm going to jump in between at 406. And I could sit here with my 1,000 share buy order for a long time and wait until someone comes and sells me shares. By doing this, my 1,000 shares is actually adding liquidity to the market because I'm making it so someone else can come create the transaction by selling me shares. And by adding liquidity, NASDAQ will actually pay me a little bit of money. It's not a lot of money. It's about a 15th of a penny. But on 10,000 shares, that's $15. So it does add up over time. High-frequency trading firms will use this type of rebate relationship to actually generate some profit for themselves by just buying and selling all day long. They are creating liquidity in the market, and the market makers, the ECNs, like that. So now, on the other hand, if I say, I want to get in this right now, I could just buy from the person selling here at 415. And if I do that, then the order is going to go through the time and sales right down here as a green transaction. It'll be a green print at 415, and it's a buy order. So yes, someone was selling, but I was the one as the buyer who initiated the transaction, which means that we would consider this to be a bullish transaction that occurred at the ask price. So when the orders are green, it means that it was a buyer who was initiating the transaction. And when they're red, it means it was a seller who was initiating the transaction. So when we look at this chart, we're going to see, I suppose on this particular chart, there are more sell orders that were initiated than buy orders. In fact, there are really only a few large buy orders. There are a lot more large sell orders on this particular chart, which does communicate that there's a bit of an imbalance towards the sell side on this chart. Okay, so the bubbles reflect actual prints, actual orders that went through the market, and the biggest bubble will be the largest single order that went through during the course of time that we're looking at here on this particular chart. Now, by the way, you can use these bookmap charts on really any financial instrument that you want. You can use them on cryptocurrency. You can use them on stock, as I am right here. You can use them on Forex. It doesn't really matter. So I'm focusing, of course, on stock because that's what I trade. But as far as understanding how these work, this will be the same no matter what you're looking at. Okay, so we've got the historical prints in the bubbles, and then we've got, let's see, the current order book. So the current order book, COB, is right here. And this is essentially level 2 displayed as a ladder. So instead of the current price is right here at this line. So this is the bid and this is the offer, right? So typically they're side by side with the bid being on the left and the offer or the ask being on the right, right? And so this is kind of a ladder, and this is sort of a ladder, so to speak. And if you stack them on top of each other and invert the ask, then you have this tall ladder. So that's essentially the way this is displayed. And it's not totally uncommon. So this is the current price. This is the bid down here. And this is the ask up here. And the offer naturally goes higher and the bid naturally goes lower. And this is the current market. Now, I personally have never really liked looking at the level 2 in the ladder form, because for me, I find it difficult to sort of move my eye vertically up and down here. I just find it to be a lot easier to visualize level 2 in this more standardized form where we're looking at the bid on the left and the offer on the right. This is just, for me, it's what I'm used to, but I think if forced, I could probably train myself to use this. But you also don't have the same, this is a very different way visually of looking at level 2. Let's be honest. This shows me tiers. It shows me how many buyers at the same tier, 58 or 62, 55, 53. So like if I just take, just sort of pause this for a moment, you've got 1, 2, 3, 4 buyers at 53, now at 50. This is just a very different way of visually looking at the market, and I prefer it. However, what we have here essentially is level 2, and it's just displayed in the ladder form. But what is helpful, I suppose, to visualize here is that you have this histogram, which shows you where you have large orders. So right now, we have a very large order here at 105,000 shares at $3.40 approximately, right? So you can visually see that. Now, it's displaying it for you right here on the order book, which it is helpful. It's definitely a much more visual representation than what you would see here. So Bookmap isn't currently set up to allow you as the end user to fully customize the display of this current order book the way I might like to. I think that if I was going to really try to get on board with using a ladder, I would try to display it differently, because using level 2 is super important for my trading, but I don't like the ladder. That's just personal preference. Okay, so first of all, we've got our prints, which are the historical orders, the bubbles that go through. These are all over the chart. Then we have the current order book, which is displaying the actual level 2 of the current market. And the histogram is showing us where we have big orders that are sitting on the current bid or the current offer, which is great. So now we know where those are. Okay, so the next thing is the heat map of previous limit orders. And this is what you're seeing in the background right here. So this order at 105,000 shares has been there since right here. So you see how this actually goes all the way back here to there? It's because that's the moment that order was placed there. This heat map for the 48,000 shares at $3 goes all the way back to right here. So that's when that order was placed. And these orders were placed right here. This order was placed right here. And what you'll sometimes see is an order like this one right here that was placed and then disappears. It was canceled. It didn't get filled because the order just ended. It went away. So that was an order that was sitting on the level 2, but then got canceled. This is an order that was sitting on the level 2 and got canceled. This is an order right here that was sitting and got canceled. These are orders right here that got canceled. This is an order here that got canceled right there. So I find that to be very interesting because I have never used any software that allowed me to see where big orders were placed and then canceled, or that show me how long an order has been on the level 2. The level 2 for me has always been this dynamic, real-time moving tool. I haven't ever been able to visually see sort of in static form how it looked during previous periods of time. But you can actually see exactly that with Bookmap. So I find that to be fascinating. And I'll talk about to the extent that I've used it and it's helped me in my trading. Now this column right here is SVP, Session Volume Profile. So the session volume profile, what this is doing is it's actually adding up all of the shares of volume that have occurred today, and it's distributing them across the different prices where they occurred. And it is separating between the buy orders and the sell orders. So what's interesting here is that naturally, because the high a day is right here just under 360, there are no orders that occurred above that. There may be orders on the level 2 that are sell orders, and there are buy orders below the lowest price of the day, but these are where all the orders have actually taken place during the day. What did they create here is this yellow dotted line, which is called the point of control. The point of control is wherever you had the most volume during the day. This is kind of similar to volume weighted average price. The volume weighted average price is going to be basically the average price of the stock when you factor in all of the volume. So I've seen some instances where your point of control is significantly different than your volume weighted average price, but that doesn't seem to happen as often. So I actually don't think the point of control is a necessary line to have on, and I actually snapped it off my chart. So that is going to give you a walkthrough of essentially what you're seeing on this chart. You've got the bubbles, which are the historical prints. You've got the current order book, and then you have the heat map, which shows all of the historical orders that are currently still on the book and that were there, but then ended up getting canceled or perhaps getting filled. We do have volume bars down at the bottom, which are your standard volume bars. This is nothing different from what you would be accustomed to. So if I pull up book map right here, I can go full screen on this for a moment, and we could look at, it doesn't really matter, we could look at any old stock. The thing that I will say is that if we're going to be honest, I don't know how you could possibly trade off of this chart alone. Honestly, that's just my perspective and my opinion, but I don't know how you could trade off of just this. You don't have the candlesticks. There's no candles. I mean, I'll say that you can add the candlesticks, and I'll talk about that in a second, but I wouldn't add them because when I added them, they were not accurate. So basically, this is what you have. And with this, I don't think that you could actually confidently trade. It would be almost like trading with like one eye closed. It would be like driving with one eye closed. Could you do it? Sure, but why would you do something so silly? That's my truth. That's my opinion. But what if we think about it a little differently and think about using both, combining the benefits of Bookmap with everything that we already use on candlestick charts? Now that might be a better solution. So here on SGBX, we have a very nice, clean candlestick chart pattern. So let's jump back into the slides here. Okay, so I want to show you something that I noticed that I thought was very interesting. The change in the order book that occurs right at market open and at market close. Okay, so what I noticed was that right at market open, all of a sudden at 9:30 a.m., this is 9:30 a.m. right here. Look at how much the order book changes. All of a sudden, all of these orders come online. It's like exactly at 9:30, the order book changes completely. And that's no surprise. What we have always known is that right at the 9:30 opening bell, there's a lot of high frequency trading algorithms that begin trading, a lot of market makers that come online, and there are retail traders who placed orders that don't work pre-market. They only work during regular trading hours. So as soon as the market opens at 9:30, all of those orders come online, which essentially means that this order book, the current order book, became a lot more crowded right at 9:30. So there was a very distinct difference between the way this was trading before 9:30 and the way it trades after 9:30. Now, I won't say that there weren't still orders on the book. Of course there were. There was a relatively large sell order that has been here since pre-market, basically since this first started moving up. There were even some before the move began, which is always a little suspicious. And actually, I would say this is something that's really helpful. And this may be helpful for regulators too, because if they see something like this that out of nowhere squeezes up 100, 200%, and then they see that, someone put an order out to sell before the move began. Hello. All right. That's something to take a look at. Why did that person place that order? Was it just a coincidence, or did they know something? Because we know, especially with a lot of the Chinese small cap stocks, that there's some shady stuff that goes on. So this could actually be something that could help them. But in any case, what we definitely notice is that right at 9:30 a.m., the order book gets a lot thicker, a lot more orders, and they go away at 4 p.m. So right at the end of the day, 4 p.m., all of a sudden, it's the exact opposite. The order book it thins out and shuts off. So it's like it gets really quiet. So this right here is another example of market open. So this was pre-market, and then this was right at 9:30 a.m. So all of a sudden, 9:30, the order book, it just gets so much thicker. You've got a bunch more orders that come online. I think that's interesting. I think it's noteworthy. You can see that on the current order book right here in the histogram, large orders, large orders. And so that should help you better understand where we may have areas of resistance. So we know that for sure, when I'm trading, at least, I'm trading based on the moment we have breaking news, and those trades start early, pre-market. They could start at 7, 7:30, 8, 8:39. But oftentimes at 9:30, we get stocks that start to become very thickly traded. And I've been able to say that, but this actually shows you what thickly traded looks like. So thickly traded means there's a whole lot more sellers and a whole lot more buyers. It's just more congested. Now, I don't think any of that is necessarily going to help you be a better trader. It's just something to be aware of. So now let's use a case study here of a momentum stock. This is SGBX. Okay, so SGBX, this is the traditional view on just a regular chart, right? Regular candlestick chart. So you see the price, we got this nice squeeze up, a pullback, and then it ends up pushing higher. This is showing that same exact chart, but this is showing the heat map. And the heat map is displaying, as we already talked about, the big orders that are placed on the level 2. The bubbles are the orders that actually went through. So when the price first started squeezing up, it was a lot of small orders. A lot of small orders, a few sell orders, a few more small orders, some sell orders, a few more small buy orders, another bigger buy order, bigger buy order, bigger sell order, buy order, sell order, and then some sell orders as we came down and we kind of went sideways before we started to get some buy orders that came in right here. You can see this was a seller on the level 2. This was another seller on the level 2. This was a buyer on the level 2. This was a buy order that was placed and canceled very quickly. This was an order that was placed, and then this person bought up all of those shares. So that's how that works. So that order was now gone. Right at the open, this was 9:30 opening bell. Again, market gets much thicker. A buy order, a sell order, and then this was sort of that red to green move as the price surged higher. And you can see as it was moving, there were just a lot of buy orders down here, but there were also a good number of sell orders as it was coming up. A bigger buy order a little bit down low, a sell order up here. Okay, so does any of this really help you with taking better trades on it? As of right now, I don't know. Now, what about the second pullback? Let's watch this. So here we had this, this move to the upside right here. We pulled back, we sold off, we came back up, we squeezed higher, we pulled back, and we punched higher up to 6. And right in this area, I was watching to take a long right here. This is where I was watching to take that breakout. Now, at this point, I was already up $5,000 on the day. And I'll kind of walk you through some of the trades I took in just a moment. But I was already up $5,000 on the day, and I was thinking about taking this trade. Now, I looked at my heat map, and you know what I saw? Look at this. I saw this huge block of sell orders right here between 6 and 620. So look at all that resistance. That's a lot of resistance. Now down here, we have some support at 520. That's an interesting place to be buying. But buying right here, right into this resistance from all those sell orders, doesn't seem like a good idea. Now, granted, all of these sell orders were displayed on the traditional level 2 depth of market. So just looking at level 2, you should have been able to see them. But this is a more visual way of seeing it. It makes it impossible to miss. So I predicted, because of all of these sell orders right here, that this was going to reject, that this would pop up and reject back down. And let's look at what happened. it popped up and rejected back down. Exactly what we thought, right? It came into this level and rejected back down. And you had a lot of people that dumped down here, but look at where it bounced off of. Surprise, surprise, 520, right where that big buy order was. Now, this isn't really any different from how I already trade because I use level 2 so actively in my trading. I'm watching the big bids. This is where I'm buying. So for someone who is never using level 2, then this chart would be like incredible because all of a sudden you would have insight into the depth of the market. For traders who are already using level 2, which hopefully are all of the members at Warrior Trading, because this is something that I teach you, I think that this is just a different way of visualizing it, and it's interesting, and it may be helpful. Now, I actually pinned a link to the top of the comments, and I put it in the description where you can download my micro pullback strategy PDF. You can download it, you can print it out, you can have it next to your desk, and you can use that as a resource because what it does is it walks you through the strategy that I'm using of where I'm getting in and where I'm getting out when we have a strong setup like SGBX that is pushing higher. Now, that is my go-to strategy. I've been trading for years. It doesn't include the sort of new edition of Bookmap. I'm not sure to the extent that I'm going to be using this long-term. That's still to be determined. But for those of you that want to get a better sense of the way I'm trading these stocks right now, make sure you download that PDF because it's going to help you a lot. Now, I want to show you this example here of what I would call a thickly traded, grinding, and congested stock. So this is one where we can see right at 9:30 at the opening bell, all of a sudden, all of these orders filled in and it became really thickly traded. Lots of orders on the buy side, lots of orders on the sell side. And this was just a stock that was not moving quickly. It was not easy to trade. When we looked at the chart, we could see on the candlestick chart, it was grinding, like it was moving higher, but it was kind of going sideways. You know, it just wasn't clean. And if we looked at the level 2 on this one, you know, we would see that the level 2 was very thick. It was just really stacked up. This is just something that I wouldn't have wanted to day trade. And when we're looking at, this is like the historical book, and this is moving forward. So this is current time right here, which is why there's no volume bars here. So basically it just projects all of the current orders forward if you're sort of scrolled back like this. Which is fine. It's a fine way to look at it. But this is a thickly traded stock. Now, when I say something's thickly traded, sometimes people are like, what does that really mean? And what it means to me is that there's a lot of orders stacked on the bid. There's a lot of orders on the offer. This thing is just like so congested with orders. It's not moving quickly. It's just like trying to sprint underwater in a pool. Like it's just, you know, you just cannot seem to get going. That's what these feel like. So it's very clear in the visual display here when you're looking at something that's going to be thickly traded. And there's no question that that deviates significantly from something like SGBX, which was today's best trade. So now, one of the things you can also do is identify large block orders that are just sitting on the order book. And occasionally I've pulled up a chart and I've seen something like this. So just a random 20,000 share sell order at $3. It's like, wow, that is a significant order. That's a big sell order that's just sitting there relative to everything else. This is a range created by large sellers. So look, you've got this big seller here, you've got this big buyer here. So the range is created. Honestly, it wouldn't surprise me at all if this was the same market maker that was sitting on the offer and on the bid. That might be the same firm, the same institutional trading firm, and they're basically holding this between these ranges. So this is a large cap, by the way. I think this was Apple that we were looking at that time. This was, I think, Tesla. And again, big sell order up here at 190, creating that wall. Sell orders here, sell orders here, sell orders here. And the sell orders kind of like increasing in size and then decreasing, and then increasing and then decreasing, and then increasing and then decreasing. And then a new sell order comes in right here. Right as the price comes up, boom, sell order comes in, they block it, right? They block the way. They say, nope, not today, buddy. And then here you've got this big buy order down here, and this person sold into that buy order and knocked it out. The buy order was gone after that sell went through. So this is an order that was sitting on the book all day long, and then finally that sell order took it out. Right here, you have some orders that were placed and canceled. Here you had an order that was sitting and got taken out. More orders came back. They got taken out, so more people were buying. So you can kind of see this. It just tells you a slightly different story when you can factor in the actual orders that were sitting there. But again, without the candlestick charts, it does feel like a real absence of context, but it's not that it's not helpful. It's just that it's lacking. So here's a big order. There's another big order, a big order down here. Now, this is an interesting pattern right here where you see that there were sell orders and they keep getting accumulated by buyers. People keep buying up those sellers. So this is an accumulation of sell orders because the sell order gets bought up, it disappears. Gets bought up, huge buy order right here. That sell order got bought up. We came up to here and then that sell order got bought up. So this was NVIDIA. There were buyers that just kept buying it up more and more and more. But you know what's really fascinating is watching high frequency trading algorithms and watching market makers control price action. This is the S&P 500. This is a visual display of computer algorithms moving the market. That's literally what is happening right here. It's pretty wild. This isn't something that I had really ever seen in this visual display. And I actually want to show you a video here of me recording these high frequency trading algorithms at work. So let me grab this video for you here. This is really interesting. So this is on the IWM, which is the Russell 2000 index. And let's see, why is this glitching on me a little bit? All right. So this is showing all of the orders that have been placed. And again, just showing this pattern of orders being placed and disappearing, right? And this right here is current time. So as this is moving, these are current orders that are being placed. And look at how rapidly they're going to be placed and then disappear. Those orders are being placed and pulled, placed and pulled, placed and pulled. This flicker of orders being put on the market and taken off the market and put on the market and taken off the market. These are high frequency trading algorithms and they are actually affecting the market. To what extent they're even allowed to do this, I don't know, because this to me looks like it could be order spoofing because they're putting out orders and then canceling them, putting out orders and canceling them. But you know, this happens every single day, and this happens, in fact, all day long, every single day. They're just jumping around, jumping around, jumping around. So that is indicative of high frequency trading algorithms. Now, you know, to the extent that this is going to happen on a small cap stock, not as likely. Small cap stocks are not as popular by these big institutional traders who are sort of, you know, gaming the system. The small cap stocks, there's not even enough profit potential in it for them. So that's the area of the market where we as retail traders actually have a little bit of an edge for me. So I showed you the orders of the videos being placed. Now, this is an example of orders getting really tight around the current price. This creates the illusion of liquidity because you've got a lot of orders right here, and then you have a big stretch with like basically no orders. Look at how empty the heat map is. There's nothing there, nothing until here. So what this tells you is that there's probably an institutional trading firm that's holding the price firm in this area, but if it busted out of that, it would go right up to here, or it would drop probably right down to here. So you'd get a big move, but as long as it stays pinned in this range, it's not going to move. It's going to be tight right in there. So now let's talk about some of the drawbacks of using Bookmap, because there are some drawbacks. The first is that this is resource intensive on my machine. You can see right here, Bookmap is taking up 15% of my CPU usage, is taking up a ton of my memory. Now, Firefox is definitely a hog because I've got my slides and I've got a ton of stuff, and I probably have like 100 tabs open at any given time. But regardless of that, don't judge me here. This stands by itself as being pretty intensive, I think. That's just my opinion. I think it's pretty intensive. And this computer that I'm using right now is It's probably a $3,000, might even be a $3,000 definitely computer. It's a pretty expensive computer. So it's resource intensive on my machine. Most challenging is the onboarding. It is really confusing to sign up for Bookmap. So much so that I almost gave up. I was like, this is ridiculous. This is just silly. Like, I don't even understand why this is so difficult. I actually looked at their reviews, and one of the first reviews was onboarding is incredibly cumbersome. And they're not wrong. I mean, they're 100% right. Like, you shouldn't I've been trading for more than a decade. I'm good with computers. I'm good with trading software. And it took me a minute to figure it out. So I just kind of felt like, why is it so complicated? You've got to make it simple. It's just an honest critique. Make it simple and people are going to use it. It's going to be easier for people to use. If it's hard for an experienced trader to figure out how to start using it, that's not a good idea. Now, a major problem for me was that the candlesticks appear to be inaccurate. So if we pull up the actual platform here, well, before I do that, I'll also just comment that it's expensive. So when you sign up, you first sign up for the platform itself, but it doesn't have any market data. And this is what was super annoying. So basically, I'll just create a new workspace. Just create a new workspace here. So when you first open the platform, it looks like this. And you're like, at least I was like, what in the world is this? I just paid for it. $50, $59 a month, I think it is. $60 a month, something like that. So or maybe it's $100 a month. I can't remember. Anyways, I paid for it, check their website. And I'm like, please configure and select a platform from the connections menu. What in the, how does this work? So I'm like, Tradeovate? What is that? I don't have a Tradeovate account. That's for futures traders. So I'm like, okay, I don't have that. Bookmap data. So this is just going da-da-da. I couldn't get this to work. So I got nothing on this, and I was confused. So I was like, okay. Then I go into connector to configure, and I go add connection here, and it adds a connection. Now you go to the drop down, and it's like, these are the different connections you can make. So I'm like, okay, TradeStation, NinjaTrader, all right. Tradeovate, Interactive Brokers. So it appears that you can connect, and I'm sure you can, to different platforms. Now I've downloaded a plugin, well, whatever. But to me, I really just, I found this to be really not intuitive. I could not figure this out. So then going around on their website, I saw that you could sign up to DX feed, and that's, I think, $100 a month. So I was like, okay, so now I've got to sign up for that. So now I have two subscriptions to them. One is for the software, and then the other is for the market data. So now I'm like, all right, so let's see. And you can see right here, I don't know what it's doing. So let's just go create a new workspace again. So create new workspace. Looks like it's kind of stalled out on me. All right, so I'm just going to exit without saving. Close that video down. So I'm going to load it again. We'll see if I can get it to load. So this, I think if I were them, if I owned the company, I would try to make this much more streamlined for onboarding. But I guess that there's a lot of people that are using this and just connecting it to their own market data feeds, which is nice because if you do that, you're not double paying on data. It just so happens that I don't have market data with any one of these providers. That wasn't an option for me. So I just had to sign up and pay for it again. I mean, I already pay for market data, but it's just not one of the ones they support. So now I'm paying an extra $100 a month in market data. So it's going to be like $160, $170 a month or so, I think, for this platform. It's not cheap. And to me, it's kind of like, I don't know, it feels like it's missing some of the things that I would want. So anyway, so then once you're in it, so if you get over the price and you're fine with that, or you have a market data feed and that's only like $60 a month for you. So then what you do when you first log in is everything is blank here. And you're probably like, this is a weird way to log in. You click the plus button and then you can start typing in what you want to pull up. So we'll pull up the S&P 500 here. And this is actually going to be kind of interesting because we're coming right into market close. So right now is 357. We're coming into the market close. So we'll see the orders change a little bit. IWM, we can subscribe to that. So when we look at it like this, you do have the ability to add more columns here. You can hide this column. You can add a new column. You can configure the column. I'm going to turn off the point of control line. I actually don't think it's really helpful. So this is showing all the orders that have been placed and where we had the peak volume. This is showing our current order book and it's showing the orders that are moving around, and they're very dynamic. They're moving very quickly, as you can see. This is the S&P 500 on a Friday, options expiration, orders are jumping around. If you press the studies configuration right here, you could add candlesticks. And it says that the interval is a 1-minute chart. So I'm like, okay, that makes sense. You change it to a 5-minute chart, whatever. Okay, so I change it to a 1-minute chart. And I'm looking at this right here. And I'm thinking to myself, let's look at the S&P 500. Look at the 1-minute chart. And we'll just compare them. Okay, so this is the 1-minute chart for the S&P 500. This is the actual 1-minute chart. And this is saying it's a 1-minute chart. But look, red, 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 red. Green, red, green, red, red, green. These are not the same candles. They're different. So now I'm left a little confused about why a 1-minute and a 1-minute chart aren't matching. And look at how this green candle is sort of overlaying on top of that red candle. So that to me looks not right. I mean, it looks weird. It's weird. So, and we're coming right up here to 4 p.m. So we'll see at the bottom of the hour. But you can see like this candle, this is real. This is accurate, 100% accurate. So this is my source of truth here. And I could just tell that there's a difference. What I was hoping was that, maybe, not really maybe for me, but for other people, that these candlesticks would be so good that you could actually use this for your entire platform. But it doesn't actually feel like you would be able to do that. Do you see right there, that sort of change? So we just went into after hours. So now look at that. So the algos are shutting off. They're saying, good night. I'll see you next week. Night, night, computers. And now we're in after hours trading. And this is a reminder of how much of the market is dominated by high frequency trading algorithms. If you are trying to trade the S&P 500, you're trying to trade, even if you're trying to trade Apple on a typical day, or Nvidia or Tesla, you're trading against the machine. You will lose. Your odds are stacked against you. They have every edge that you couldn't even imagine. They will beat you, and they will take the money right out of your pocket every single time. So I would say what I do like about this, SGBX, So again, now you got to go into subscribe. This is kind of clumsy. SGBX, you got to subscribe here. You can choose, I'll just do 12 hours. So I'm going to subscribe. Every time you close a window, you've got to unsubscribe. So it's 2 clicks to close. I just think that's a little clumsy. It just feels like a platform that's not polished. And I feel like it has a lot of potential. What I would almost want them to do is to like integrate some really decent candlestick charts on here so you could overlay this. Like that's what I would like. I would like to overlay this on top of this. That would look good. That could be very interesting. Now, unfortunately, it's going to cost $170 a month to do that. Is it worth it? You would have to have level 2 data, which costs you $100 a month. and then, you know, it's cost you $50 a month. So like, I don't think it's going to make sense for me to add it to this platform, to add, you know, Bookmap to this. It's going to be too expensive. I don't know if they let you add on to TradingView, if they have like an API there where if you sign up, you can add it. But anyways, so if we look at when we first got the move right here, we scroll back. This is going to be the case study of my trade from this morning. So when I took those first trades on SGBX, the way this happened was the stock first hit my scanner, and I'll pull up here. Let's see. I'm going to pull this up. This is actually my case study from just this morning. So it hits my scanners, SGBX, at 9 a.m. at $3.14. I pull up the stock and I immediately buy before I even pulled up Bookmap. I didn't even have a chance to like click the plus button and add the symbol. I just knew the stock, so I bought it. So I got in at about a 325 average. So there's some green buy orders here, small size orders relatively. So I'm adding in here. It pushes higher, hits a high up here of 60. It dips down. It pushes a little higher. And then we start seeing some of our first sell orders, right? We see a little sell order right here, and we see a buy order here. We end up breaking over this level of 415 right here, and we push up a little higher where we have a little resistance at 450. Now, the resistance at 450 made sense to see those sell orders there. Why did that make sense? Well, if we look at our candlestick chart, again, we can't rely just on Bookmap because the candlestick charts on Bookmap are not, don't seem to be quite right. And maybe I'm just doing it wrong, but I've never done candlestick charts wrong before. It's kind of hard to. Anyways, maybe I'm wrong. Benefit of the doubt. It's probably me. I'm probably just a dummy. All right. So anyways, yesterday SGBX came up, hit this high right here of 54. So this morning I expected it was going to have resistance right at that level, and it did. So when I then pulled up Bookmap and saw those sell orders right there at 54, I was like, yep, that makes sense. Now it came up, we tried to buy into it, couldn't break. The sell orders were too big. We came back down. That didn't surprise me. Okay, so then we move a little bit further forward. We come back up again. We still can't break it. People are buying, but there's people selling. We come back down again and look at in this area. In this area, we see this bid support. The buyers on the bid at about 4. And if you remember from this morning, I was saying, guys, I'm buying here at 405, 407. I'm trying to get in on this dip because I think it's going to hold this level. Part of that was seeing the buyers on the level too, and being able to see it visually on Bookmap was helpful. That was helpful to see it right there. It was plain as day. So then coming into the open, we ended up pulling back a little bit more. We dipped down. So I was like, a little bit bummed out. We pulled back more. And then right here, there's this big seller right at 4, right? You see that wall? It's right there. And then big buyers accumulate right going into the open, and watch this. Boom, it pops up. It dumps down a little bit. And as soon as the bell rings, again, all the orders start to come in and fill in the book. But there's some buy orders here. It squeezes up to 420. We break through. We punch up to 450 where we still have, there's a seller there. Now, it's worth noting that it's not the same seller. Because if it was, that would have been a static bar all the way across. So those sell orders were canceled, and new sell orders came out, and buyers blew right through them. So the buyers blew right through those sell orders there, and now it starts to pull away. So, you know, you start to get dialed in here a little bit more. It starts to pull away higher and higher. The red and the green line is showing, it's actually showing the spread. But honestly, it's kind of hard to visualize that. I probably would take it off the chart, but it is showing the spread. So anyways, we push a little bit higher to 510, right? So we come up to 510, and then we push higher. And through this area here, there's not a lot of sellers. Like, we have some, but they're not big. And then this back here, up around $6, $6.20, that was that big level of resistance that I didn't think we were going to be able to break. And because I saw that, I didn't think we were going to be able to break it, but then watch what happened right up here. So we end up coming back up, and very quickly, let's see, it was right here. We came back up, and we blew through that. A huge buy order right here. This was a 95,000 share buy order that went through. That's a 95,000 share bubble. Huge buy order. and boom, blasts up to here. Big seller, dips back down. And now we've got a new wall at 7. We come back up and we busted through. I didn't think we would, but we busted through. The fact is, there were some big sellers that were stacked up. And it would have been nice if we didn't see so many sellers as we were coming into these levels. It did move higher, but look at these sellers that started to stack up, right? And then eventually, well, the buyers were weaker and the sellers were stronger and the price came way back down. So anyways, for me, I guess let's come back to the question I asked at the beginning of the episode. Am I going to continue to use Bookmap in my own trading? I paid nearly $70 for it for the month. So let's see, I think I got a discount on my first month. So maybe I paid $110. So I'm in for a month. I got to get my money's worth on this. So yeah, I'll use it for the rest of the month. And I've already been using it for a little while. So I'll use it until the end of my subscription and we'll see. Right now, I would say that I am finding myself checking it every day, but on a number of stocks that have been kind of thickly traded this week and not very interesting, it hasn't given me any real support. But today, finally, we had some momentum and I feel like it did help me, but it definitely stopped me from buying at 6 and it did end up going up to 7 to 8 and to 9. So I don't know. We'll have to see. I think the jury is still out, but for me, it's interesting. Nonetheless, it's interesting. And I like the concept of being able to display market depth level 2 right on the chart. This is something, it's brand new. I've never done this before. So I think it's worth giving it a fair chance. And maybe there'll be someone out there that is able to sort of take this idea either to the next level and integrate it into TradingView indicators or, your Thinkorswim charts. So you don't have to pay extra on market data. Now, Bookmap's probably not going to want to do that. I mean, maybe they will. I don't know. Maybe they will. Maybe they'll create some integrations that work a little bit better and are more cost effective because I think there's value in it. So yeah, I think that's kind of my takeaway right now. It's interesting. I wish it was a little bit less clumsy. I wish the platform itself was a little better. And I think it might be cleaner if you could just overlay it on top of your current charts. But that would ultimately require either platforms like Thinkorswim or TradingView to kind of re-engineer, like, how does this work? How do you plot level 2 on your chart? So not really that complicated, but no one's ever done it before. So I'm not going to throw out my candlestick charts anytime soon, but I don't mind adding a new tool to my tool belt because this is something that I actually think has the potential to be very helpful in my trading. And I will continue to keep you guys updated on what I think of using Bookmap. Thanks as always for tuning in. I hope you hit that thumbs up. I hope you're subscribed to the channel, and I'll see you for the next episode real soon.